I think it's a really good question when you start thinking about how to save for children or grandchildren's education. Where I like to start is really at the foundation. I think the most common place that question comes up as soon as the baby's born, right? Like, okay, new child, hey, let's start saving for education. Well, the first question to ask is, are your cash reserves and access to capital still okay? Meaning we don't want to save for education at the expense of making sure you have an emergency fund established. No different than for retirement, right? Like we don't want to save money for retirement at the expense of having your 3 to 6 months in cash reserves. From there, what I really ask clients is, do you want to make sure that when you're saving for your children's education, that you have control of the asset, or do you want it to go to them no matter what? Because that will further help people decide, well, no, if they don't go to school, I'd rather make sure we have access to those funds for our own retirement,
Right.
or to gift them for a different use. That will also help control where they set those funds aside. There are obviously tax ramifications in many states if you set money aside into a 529 plan. So here in Michigan, the first $10,000 set aside for education comes off your state tax return. It's a modest reduction in income tax, but a deduction nonetheless. But then those funds can be used for college without the tax ramification when used for education. The Secure Act 2.0 has influenced that decision a bit in the sense that now any excess funds set aside for education that aren't used, as long as the funds have been in there for a period of time, can actually be sent to your children's Roth IRA subject to annual contribution limits. So typically what we find is making sure that they have an overall strategy and plan to save not only for education but their other financial goals, and then exploring the use of 529 plans versus after tax dollars.